I started my investing journey with 100 bucks and a dream. I started in Robinhood, opened an account, but since have moved to M1 Finance. But the point is, I started with a dream to create a future of dividends rolling in, and you can too. My portfolio is spread out across a few Fidelity accounts and this M1 Finance account, and now has a total value of over $94,000. It takes time, dedication, and consistency, and today I'm going to share all the holdings in my portfolio. Now, because my accounts are spread out across different platforms, I actually use the Dividend tracker so that I'm able to view all of my holdings in one place. I'll put a link in the comments below if you want to check it out. There are so many features that I love about the Dividend tracker. It allows me to sort the information by ticker symbol, so I can do it alphabetically. By the total number of shares that I own, I can sort by price, percentage change, my dollar amount of profit and loss, percentage profit and loss. How much equity do I have invested? What's the market value, the average price? I can also look at dividend yield, the amount of annual income I'm receiving, my yield on cost, dividend grades, or the weight that particular holding makes up in my portfolio. At the present time, my dividend yield is sitting at 4.74%, and my yield on cost is 5%. My projected annual dividend income is at $4,486.78 right now. And I'm 37% of the way to my long-term goals of $1,000 a month or $12,000 a year. But for the year ahead, I'm shooting for $6,000 in projected annual dividend income, which would be an average of $500 a month. My other goal is to see the value of my portfolio hit over $100,000. And I really feel like once I hit this point, things are going to really start moving along. I feel like it's a huge milestone. So let's start by sorting by total equity, which basically means how much I have invested. And the market value, which is just to the right of that, is based on what it's worth today. So the total number of shares I own multiplied by the share price right now. So if I were to decide to sell my shares, this is how much cash that would equate to. SCHD is my largest holding, currently with 338.89 shares, and has a current market value of $25,847. My next largest holding is Realty Income, followed by Altria Group. You can see with both Altria Group and Realty Income that my equity, or the amount that I have invested, is higher than the market value. So basically, this is telling me that when I purchased my shares, I bought them at a higher share price than they're currently selling for. So I have an unrealized loss at the moment, meaning I only realize the loss if I were to sell my shares. So this does potentially present a buying opportunity. If I were to add shares of Realty Income and Altria Group right now at a cheaper price, it would bring down my average cost per share, which would then begin to chip away at my unrealized loss. So I'd be using the dollar cost averaging strategy. If we pop on over to the diversification tab, you'll see that the percent of both Realty Income and Altria Group in my portfolio has creeped up quite a lot because I keep adding at these lower prices. And while I love the cheaper share price, I don't want to put all my eggs in one basket. I do think 5 to 6% in any one holding helps to minimize your overall risk. But because I receive dividends from both of those holdings, those dividends are buying more shares each time they roll in, which in effect will help to lower the cost overall. As we scroll through the rest of my portfolio, you'll see each of my holdings and the percentage of the portfolio that they presently make up. As we start to near the lower end, or the bottom 18 holdings by percentage in my portfolio, these are the companies that make up my big safe dividend portfolio pie slice in M1. This is an experiment that I started in July of last year, and coincidentally, I just published an update video on that slice of my M1 pie just last week. So I'll link to the whole playlist in the comments below. Now let's talk for a moment about the dividend tracker. I mentioned earlier that I'm using it because I have investments that are spread across different investing platforms, and I like to be able to see everything here at once. Things that I like to look at include the average cost, my yield on cost, total unrealized losses and gains, and the dividend tracker allows me to do all that. The benefit to this is that it also allows me to keep close tabs on potential buying opportunities. I like to sort the data by looking at the P&L percentage. This will calculate my percentage unrealized loss. By comparing the price I paid for the shares with the current share price, I can easily identify potential buying opportunities for me based on the price I paid for the shares that I own. So for example, if your average share price for a company is $100 a share and it's trading at $125 a share, you may not want to add more right now. But if my average share price for that same company is $150 and it's trading at $125, it might be a good time for me to add more shares. But it's personal finance, you guys. So you have to decide when you feel there are good opportunities to add more shares to any of your positions. So using the dividend tracker helps me to see where I'm at so I can make those decisions based on data, allowing me to strip some of the emotion. So if we use my portfolio as an example, you can see for me that my biggest losers by percentage of unrealized losses are Pfizer, Hughes, Hershey, and Next Era Energy. By percentage, Pfizer is the biggest loss. So I need to ask myself two questions. Are these positions that I'd like to continue growing? And if they're in my portfolio, the answer should be yes, right? And my second question is if I add them, how does it affect my overall diversification? Meaning, am I too heavily weighted in any one individual stock? Because that too can add some unnecessary risk. But again, personal decisions. If you were to step into a casino, are you the kind of person that's going to throw down $1,000 on red at the roulette table? How much risk are you actually willing to take? So know your limits when you're making your investments. Okay, carrying on. If we go back to the diversification tab, we can see that Pfizer makes up 2.28% of my portfolio. Hershey is at 1.2, NextEra Energy is at 1.06%, and Littelfuse is the tiniest position in my portfolio, making up 0.13%. So knowing the percentage that each of these holdings makes up in my portfolio, it helps me to make a decision as to whether or not I'd like to add more. Truth be told, I've been adding shares to Pfizer every Monday and some fractional shares of Hershey and NextEra Energy. Because Littelfuse is part of the Big Safe Dividend portfolio, those 18 companies are being added to pretty consistently. And so you can see they're all kind of at the same level of holding in my portfolio at the present time. So the dividend tracker, it's one of the tools I use every weekend to determine what my Monday purchases are going to be, based on where my biggest opportunities lie. I also consistently add at least one share of SCHD every Monday and have been adding one share of SCHG every other week because I like to be consistent in my approach. In addition, I also like to use websites like Seeking Alpha to do company deep dives as needed to determine if the company continues to meet the criteria for inclusion in my portfolio. And it also has to align with the strategy that I've created for myself. I just released my strategy video for the year ahead just a couple of weeks ago that I'll also link for you guys in the comments below if you want to check it out. But if we quickly look at a company like Hershey, this is a position that I've been adding to in the last few weeks. You can see that in the last year, it's down in share price by almost 15%, has a forward PE of 20, the dividend yield is 2.5%. And if we look quickly at the dividend summary, there's 14 years of growth, a 5-year dividend growth rate of 10%, payout ratio is only 44.84%. So basically what I'm saying to you guys is use the tools that you have available to you to help you make the decisions. Without a doubt, my other favorite component to the dividend tracker is the payout dashboard. Based on the number of shares that you own and the current dividend for each company or ETF, you can see your estimated income for each month of the year, which then calculates your monthly averages, your projected income for the month that you're in, as well as your projected annual dividend income. There's also a dividend calendar that highlights for you those days where you're going to be earning some income while you're sleeping. Those days that are highlighted in blue are the ones where you can expect that income. The darker the blue box, the more dividend income you can expect to receive on that day. So looking at the month of December, which was my best month on record, you can see that on Monday, December 11th, let's click on that, I received the largest amount of dividend income on any day since I started dividend investing. You can also click on the individual day, which I've done, and see which companies are paying you along with the amount. And as you can see, because SCHD is my largest holding, I received over $251 from that one holding, which all on its own added just under 4 shares of SCHD to the mix. And this is why I love dividend investing, because my position in SCHD is starting to snowball, you guys. And if you'd like to learn more about the dividend snowball and how to create one, I'll share a link for you in the comments to that as well. So tell me, what are your top holdings in your portfolio? And which one provides you with the most dividend income each quarter? And do you have a maximum percentage that you'll hold in any one position? Leave me a comment below and then go and take a peek at this video next. If I were to shell my shares, what the shell? Percentage, jeez Louise.